What's up, YouTube family? Welcome back to another episode of Market Grinders with Lydell and Am. Thank you guys for tuning in today. Please make sure you guys like, subscribe, hit the notification bell, guys, and so you'll get these posts as soon as we post them up for you guys. All right. Today, guys, we're gonna talk about what's some of the things that have been going on in the world. Definitely dealing with the pandemic and the viruses and that Delta variant. So, just wanted to have an idea of what we feel you should do with the market if depending on the viruses and how if it continues to spread or not. So yeah, what the news about the variant, does it make you feel more comfortable investing in the market or certain items of the market?
Um, this is my opinion about it. Not a scientist, not a financial advisor, but the way I'm playing things and thinking about it, like we don't really know enough about. I think we know a lot about the first virus, and we have these vaccines out. So I don't think this variant is, in short term, gonna cause a lot of panicking or cause a lot of people to start shutting down businesses in the way that we did, with the first pandemic. Not saying that it won't happen, but I don't think it will. We will shut down as we did the last time. So you go look at charts from March. You can tell in March, when the pandemic, I guess, was recognized or started, how we didn't know what to do. We shut down companies, and the stock market tanked, which gave a great opportunity to buy. So with this variant, I think we know enough about it, and the vaccines are effective enough that I don't think it'll tank the market. Now, if other variants come out, other news come out, other things come out, there is that possibility that we could get into a downward state or turn into a bear market. So you got to have that in the back of your mind. But like as far as I'm thinking, I don't think we'll get a 20% pullback in the market. And but if we do, I'm prepared for it, and things that I'm doing to be prepared for is a lot of my trades, my growth plays that I'm not looking to hold for 5 to 10 years. I have trailing stop losses set on those. So and we've explained trailing stop losses a bunch of times. So basically, if the stock pulls back over a certain percentage, my account's triggered to go ahead and sell those stocks and put that money in my buying power, so that now I have an opportunity to hop in and buy some of the other companies that are at a higher price. I get an opportunity to buy them a little cheaper with the money that I collected from my trailing stop loss. So that's one thing I'm doing. Another thing is daily market averaging. We've explained that once before in a couple videos as well, but just to briefly talk about what daily market averaging is basically you're trying to get an average price for your stock. So what you do, you can and you're also trying to buy a certain number of shares. And I do this with my long-term plays, so once a week in some, once a month in others. I just continue to buy. So when the market is at a high, the shares that I bought at a lower price, they're gaining more value. When the market's at a low, the shares that I'm buying at the lower price, I'm getting them at a cheaper price, which brings down my average price. So for instance, if I bought a company, ABC, at $100 in January, I bought like 50 share. Then I turn around and the stock dropped. Then I bought 50 more share in July, at $50. So now I have a total of 100 share, and I'll add up my, just to do the math, you add up what you paid for them, that's 150, and you divide it by 2, so that puts your average price around $75 is what you paid for those stocks, even though I got some for 100 and I got some for 50, but the average price is 75. So as soon as the stock price hits 150, I'll double my money. And if I continue to average down by getting shares at a cheaper price as I buy every day or every week or every month, that puts my profit margin a lot quicker. So I'll gain profit a lot quicker. So that's the way to think about daily market averaging. But those are just some of the things that I've been doing or been kind of ways I've been setting up my accounts just in case we do get a nice pullback or the Delta variant does kind of starts to trend the market down. But just me personally, I don't think we'll see the type of pullback that we saw March from the first virus. How are you playing it, Lydell?
Same way. Just being aware of what's going on in the market as well, and in the community. So if I do hear about there's going to be some shutdown across the world, then I'm looking into me personally. I'm not a financial advisor. Getting back into some of the things that did well during the pandemic. I'm not saying none of this stuff is going to happen, but just say if it did happen, then I want to put my money in some of the streaming services myself, because if people going back in the house, that's one of the first things that people going to do is just watch TV. So I'm just being mindful of that. Exercise equipment is another thing that I'm looking into, because if people go back inside of the house, I don't know if this is going to be the case, but it's obvious people going to buy exercise equipment. So some of the things I'm going to try to buy, like the Pelotons of the world, which is basically great to have inside the home. But it's up to you what you research and what you look into. But those are definitely some of the things that I'm keeping my eye on if we happen to go to some type of position where the markets is not doing well, or because of what's going on with the virus or whatnot. But the virus definitely affects the market in several ways. Even with housing, it definitely affects the market throughout. So depending on how much we have it handled, then that's where I'm gonna put my money at. But daily marketing average is the main thing that I'm gonna focus on as well. So that's pretty much it. But keeping my eye on what's going on in the world is push me to what I want to buy or what I'm gonna get into. So, but that's pretty much it though. So anything that you got?
No, I mean just. And I'll probably talk this in other videos. Be mindful of the price that you're buying your stock at. So right now, it's earnings season. So a lot of the tech companies are announcing earnings now. Apple just announced. I think Microsoft just announced. I feel like Roku announces next week, and maybe some of the China company Alibaba or Baba, they announced. I think. Wednesday, Procter & Gamble just announced. So a lot of times we get caught up in thinking, when a company comes out with a great earnings report, the stock is going to take off. And sometimes it will. But the things that we need to be mindful of is if a stock is at an all-time high and they have a great earnings, you got to think there were a lot of people that have already been in this stock when it was half that price. So a lot of those people will be taking profits, on that great news. They'll be selling to put money in their pocket because they've made 10 times their money right now. So it's like, hey, it's celebration time. You in the market, you don't make any money until you sell, but you don't lose any money until you sell. So just keep that, and don't get caught up in the dynamic of a great earnings report. The stock is going to go to the moon. A lot of times when it has a great earnings report, it pulls back. And then it takes off. So it pulls back, and that gives those long-time investors who've been either riding this train to the top, that gives them opportunity to take their profits and then reinvest them at a lower price. A lot of the big institutional investors are looking at a stock for a certain price before they get in it too. And if it hits their number, that'll trigger them to buy. So you just want to be in, at that trigger point, and then ride it up higher from there. You never want to buy a stock at the top. So long story short, you buy on red and you sell on the green. So just keep that in mind, because that's a big difference in the speed at which you grow your account. You don't want to be in trades where you're riding them up, then riding them back down, riding them up, riding them back down, or you're buying them too high. And everybody's talking about how great the market's doing. You're like, why is my portfolio red then? That's because you bought your stock too high. You got to understand the charts, you got to understand the trends, and you got to understand what a good price for you is. The good thing about buying it too high, what daily market averaging does, it allows you to buy additional shares at a lower price, so it actually brings down your average price. But you got to be aware that you're doing that, so that you can really take advantage of the when the stock market starts to dip and you want to correct one of your trades. So but just want to leave you guys with that little bit of knowledge, and hopefully you guys are using this knowledge to become better investors. Again, we thank you guys for rocking with us for this long. We want to continue to bring value and train you guys on how to think and how to move within the market. So I think those are things that make you a great investor for the long haul. But other than that, we ask you guys like, subscribe, and keep grinding. Peace.